is Market News First. News you can trust.
Saul Albom, Market News First, Microcap Engine. I am quite excited. We got Ty Andros coming up on the line with us. He is with Traderview and editor of Tedbits, or Theodore Bits, and I'm quite happy to bring him up. So soon as I get the line, we'll go ahead and bring him up. We got him. You know what? I don't want to waste any time because he's a brilliant mind, and I wanted to just bring him up real fast. Ty, this is Saul Albom, Market News First. How you doing?
Good. How are you today, Saul?
I read your newsletter, and I was patiently awaiting all last week and this week for the bombshells of which we were talking about. Let me go ahead and take a step back and say that, well, tell you what, Ty, you've been following the economy for much longer than I have. We have been expecting what this week in the financials, balance sheets, and then what happened. Take it off where I left it off. Go ahead, Ty.
Well, we've had a kind of a mixed bag. Some real, I'll call it deceptive earnings reports. Lehman Brothers came out and basically lied about their financial condition. I mean, from top to bottom, whether it be valuing their commitments to private equity or their other outstanding balance sheet issues. Morgan Stanley did come out and came clean quite a bit better. However, it was right in the noise created by the surprise Fed rate cut, so really no one heard it. We're still really waiting for the bombshells to hit. Nothing has changed. Their balance sheets are crumbling. One of the reasons we saw the Fed go down 50 points, Saul, was really they saw a little bit of the face of God over in the UK, where bank runs were beginning over the weekend. And they pretty much caved in and virtually wrote a check to every depositor in the UK and guaranteed their deposits.
Now, Ty, what started the bank runs in England?
Well, the same things that we're looking for these balance sheet bombshells, which is securitized products that are mispriced. And they're far poorer balance sheet items than they would be, proposed to be. In other words, they're pretty much bad credits. And they can't go into the commercial paper market and do borrowing against them. So they were basically shut out of their ability to do their short-term funding. And it was literally spreading to the rest of the banks. The rest of the banks on Monday were literally in free fall. And the Fed saw what was going on there and said, but there for the grace of God go I, and I'm going to call it panicked on Tuesday. And, of course, we've seen a big rally off it, but it really didn't change anything. In fact, it exacerbated the problems because the long end of the market has cratered since that time. 10 and 30-year interest rates have gone up 20 to 30 basis points, depending on whether you're looking at the 30-year or the 10-year, which means that all of the refinancing and that has to take place is now going to be more difficult. And it also pokes a hole in all those loan obligations they're holding, so they're even worth less after the plunge in the bond markets.
Okay, now there was an article that I read out yesterday from Seeking Alpha. I don't remember the fellow's name, and he was saying the exact same thing, that the actual lowering of the interest rates would actually exacerbate the funky financing, meaning that you'll have there'd be more of an impetus to have, again, more arms and more funky financing. There's all those terms for it. And again, but I don't quite understand why were long-term interest rates going up as the short-term went down?
One word. The same thing why we've seen markets going up for years. And it's called fiat money creation, fiat credit creation. The money supply being increased at a 14% compounded annual rate. And all that did was saying, we're going to paper over the problem. We're going to print as much paper as necessary. I'm sure that you've noticed that gold has broken out of its year-and-a-half-long basing pattern and really points to a $150 move higher. The dollar has completely broken down and is on 30-year lows as we speak. It's inflation, and it's inflation writ large, but it was the simplest thing for the Fed to do because people that hold dollars overseas don't vote.
Now, speaking of